that they are confronted with a price revolution, which will finally result in a considerable rise of all prices, although the extent of this rise will not be the same in the various commodities and services. These people still believe that the prices one day will drop. Tuesday, August 31st, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the CrackUp Boom. I think we're on the cusp of it. And some of you might not know what a CrackUp Boom is, but I'll come to that in a minute. And why am I thinking like this? Well, for the last few years, even for the last 10, 12 years, I've always said that the monetary policies that we're seeing, fiscal policy that we're seeing from the major countries will end up in a CrackUp Boom. And I think we have symptoms of it in the markets, in society, in politics, abound actually right now. I've touched upon, of course, the fiat money inflation in France in the 1790s. I've touched upon the Weimar hyperinflation. So yeah, I'm going to reference Human Action, which is Ludwig von Mises' magnum opus. Really great book. It's not a book that you read over a weekend. It's almost like the Bible of the Austrian School of Economics. You reference it whenever you need a certain subject, and we're going to reference the CrackUp Boom. So I saw yesterday Greg Manarino's post-market report. I haven't been watching him much lately, but I could see his frustration. He's usually not that frustrated about what the markets do, but he seems truly perplexed and shocked with what the markets are doing. All-time highs all the time, no correction. And I think that's a symptom of the CrackUp Boom. The other symptom is the social, political. I mean, I don't have to tell you what a mess things are right now politically, not only in the US, but all over the world, not just in Afghanistan, but with what's happening with this health crisis that we've had. We're seeing things we've never seen happen during our lifetimes, and in places we would never expect to see these kinds of things. And by that, I'm talking about like Australia and what's going on there. But yesterday I saw an interesting story and talk about the pot calling the kettle black. And I saw this headline, Chase Bank cancels General Mike Flynn's credit cards. And it says, breaking, Chase Bank cancels its credit card accounts with General Flynn, citing possible reputational risk. When I saw that, I told myself, what about JP Morgan Chase? Does it have any reputation? I don't think so. So it just goes to show how crazy the world is. I don't know too much about General Flynn, but I would say his reputation is a lot better than JP Morgan. At least he hasn't paid, like, let's see, I added it up, over $43 billion in fines. So how do I know that? Well, Catherine Austin Fitz, she provided this report in one of her salary reports. It's about 20 pages long, 20 pages. JP Morgan Chase, selected legal, regulatory, and enforcement settlements 2002 to 2019. Of course, she's missing 2 years now. There's probably a lot more added to it, but there's 20 pages of all these fines that JP Morgan has paid over the years. And here they are saying that they have to cancel a credit card of a U.S. general because of reputational risk. So I think that's a sign of the craziness that you get in this kind of CrackUp Boom where nothing makes sense. And of course, Greg Manarino's frustration with the stock market. A few years ago, the Venezuelan or the Caracas Stock Exchange was the best performing stock market in the world, yet their economy right now is like really non-functioning almost. So with that, let's look at what Ludwig von Mises says about the CrackUp Boom. So I'll go to page 427 here, and this is what he says. But if once public opinion is convinced that the increase in the quantity of money will continue and never come to an end, well, here we are. The talk about tapering, the Fed's balance sheet, M2, right? I saw yesterday John Paulson, one of the major hedge fund managers on Wall Street, a guy who did very well from the collapse of '08. He was talking about that money supply this time around is growing unlike in 2009, 12, and 13 when they did the first batch of QEs. But let's continue. And that consequently, the prices of all commodities and services will not cease to rise. Everybody becomes eager to buy as much as possible and to restrict his cash holding to a minimum size. For under these circumstances, the regular costs incurred by holding cash are increased by the losses caused by the progressive fall in purchasing power. The advantages of holding cash must be paid for by sacrifices which are deemed unreasonably burdensome. This phenomenon was, in the great European inflation of the 20s, called flight into real goods or Flucht in die Sachwerte or CrackUp Boom or Katastrophenhause. Well, there you go. That's what it is. The flight away from paper, from currency, into real things. The mathematical economists are at a loss to comprehend the causal relation between the increase in the quantity of money and what they call velocity of circulation. So the mathematical economists are the Keynesians. That's what von Mises is talking about there. The characteristic mark of this phenomenon is that the increase in the quantity of money causes a fall in the demand for money. The tendency toward a fall in purchasing power as generated by the increased supply of money is intensified by the general propensity to restrict cash holdings, which it brings about. Eventually, a point is reached where the prices at which people would be prepared to part with real goods discount to such an extent the expected progress in the fall of purchasing power that nobody has a sufficient amount of cash at hand to pay them. The monetary system breaks down. All transactions in the money concerned cease. A panic makes its purchasing power vanish altogether. People return either to barter or to the use of another kind of money. The course of a progressing inflation is this. At the beginning, the inflow of additional money makes the prices of some commodities and services rise. Other prices rise later. The price rise affects the various commodities and services, as has been shown, at different dates and to a different extent. The first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. There are still people in the country who have not yet become aware of the fact that they are confronted with a price revolution, which will finally result in the considerable rise of all prices, although the extent of this rise will not be the same in the various commodities and services. These people still believe that the prices one day will drop. Well, those are the central bankers and the mathematical economists on Wall Street, City of London, and the people on mainstream media, right? And people like the FT, Wall Street Journal. Waiting for this day, they restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it is not yet too late for the government to abandon its inflationary policy. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the CrackUp Boom appears, everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper. Nobody wants to give away anything against them. So, as you can see, it happens very quickly. He was talking in a matter of weeks, sometimes days. Am I saying this is going to happen now? No, but I think we're getting closer and closer to it. And that's why I tell people they need to be as much as possible, and I realize some people can't do this, out of the financial system. The economy is not going to collapse. It's the monetary financial system that will collapse. Yes, I still have some kind of participation in this financial system through my mining stocks. And I don't know, to be honest, what's going to happen. We've never experienced a CrackUp boom in the West, well, for almost 100 years. And it was in Germany, of course. And most people that were alive then are gone now. And if they are still alive, they were very young to remember much. Of course, they remember the aftermath, which wasn't great for Germany, nor for Europe, nor for the world. So what do I think are the indicators, maybe the canary in the coal mine, so to speak, that will tell me that this is happening? Well, I think the CRB index is a very good indicator. And as you can see here, we're still relatively low compared to where we were in 2008 when we had the great financial crisis. We're nowhere near those highs. You look at articles, though. I saw one yesterday in the Daily Telegraph talking about the bubbles. And of course, they bring up cryptocurrencies, the stock market, housing, and they brought up commodities. And they just touched upon copper, saying that it was a bubble. But I think they're wrong. The bubble is in paper assets. The bubble is everywhere. It's the CrackUp boom. The bubble is in the currency, in the fiat currency. And the CrackUp boom is when the fiat currency really just loses all its purchasing power. And I think, yes, the CRB will be key to that. Gold and silver are part of the CRB. If you remember well, last year, the CRB went below the level that it had bottomed at in 2016, as you can see here in the chart. So yes, the catch-up has been quite significant. Gold and silver looking, comparing it to the major commodities in the CRB, haven't done well. But compared to where they were at the bottom at the end of 2015, beginning of 2016, they're doing well. So as von Mises says, some commodities move at different times. So I think as well, silver will be key to showing us there is a CrackUp boom. Silver will be a very important commodity. And when silver breaks 30 and then 50, I think we can be almost sure that we're near a point where the masses wake up. And I think they're already waking up. There's a lot of talk of inflation these days, and people are starting to talk a lot more about it. Not just the people out on the streets, Joe Blogs or John Doe, but also people, billionaires like John Paulson. So with that, let's quickly look at where the markets are this morning. So it's 8:24 a.m. London time. Markets were relatively quiet yesterday. Of course, we made new all-time highs in the stock market, which is not surprising. So we've got spot gold right now up about $6 at 18.16. Range has been 18.1960 to 18.0850. Silver is up 12 cents or 0.5% at 24.14. Range has been 23.95 to 24.22. The Dow future is up 80. The NASDAQ future is up 65. S&P futures up 13 points. The FTSE is down 22 points at 71.41. The currencies now, we're seeing sterling up almost 0.2% at 137.85. The euro is up 0.25% at 118.24. Dollar down slightly versus the yen at 109.82. And the dollar drifting lower, continue to drift lower versus the yuan. It's at 645.78. Aussie dollar up 0.5% at 73.32. The dollar's down 0.2% versus the Canadian dollar at 125.85. And the New Zealand dollar, or the Kiwi dollar, is up quite significantly, almost 1% at 70.60. WTI crude is trading at 69, so that's down slightly, just like 1/8%. So I think recently we got down to like 63. So crude is catching or rebounding very quickly. And that's why I think the CRB is going to continue to move higher. We are almost near recent highs in the CRB. So we've got high-grade copper up slightly at 437.55. Someone was looking at natural gas. I haven't followed natural gas that much, but natural gas has been going up quite significantly. As you can see here, natural gas was trading at, I think it's $1.50. It's denominated in $1.50, and recently it touched $4.50. So $1.50 is where it was last year when we had the implosion in all markets. So that's also looking quite bullish, natural gas, even though it's not a market that I follow that much. It's a very volatile market, but that's another sign there of, in my opinion, the approach of the CrackUp Boom. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.